Hello everyone, John A.G. here. Welcome back to my channel, Aurex. If you haven't yet, subscribe to my channel. In this channel, you will find the real information, the real market updates that everyone else cannot or will not tell you. The mainstream media is paid to look the other way, but here, we deal in the cold, hard, undeniable truth. So please, subscribe to this channel. I love all of my subscribers for your incredible support. You are the lifeblood of this community, and your dedication to finding the truth inspires me every single day. And please, I am asking you right now, watch this video till the very end, because YouTube will not push my videos to more people. The algorithms are designed to suppress exactly the kind of systemic financial truth we are about to uncover today. The powers that be do not want this message going viral. So stay with me, absorb this information, and let's navigate this unprecedented financial storm together. Today is Wednesday, May 13th, 2026. I want you to remember this date. I want you to mark it down in your mental calendar, because we are standing at the precipice of a financial earthquake so massive, so profound, that it will fundamentally rewrite the rules of global wealth. What if I told you that the smartest guys in the room, the untouchable titans of Wall Street, have just locked themselves inside a burning building, and through a spectacular display of arrogance and greed, they have handed you the only key to the exit? For decades, a grand illusion has been sold to the masses. It is the illusion of infinite paper abundance in a world that is rigidly defined by physical limits. Nowhere is this illusion more dangerous, more deeply deceptive, and currently more fragile than in the global silver market. Wall Street banks, massive hedge funds, and institutional short sellers have walked blindly into a trap of their own meticulous design. It is a trap built on the fatal assumption that the physical world will always bow to the digital ledger. But today, the short trap is officially set, and Wall Street cannot buy back the silver they sold. Why? Because the silver they sold by the millions of ounces simply does not exist. To truly comprehend the sheer magnitude of the crisis unfolding right now, we have to pull back the curtain and look at the grotesque mechanics of how the silver market has been manipulated for over 40 years. When you or I buy a physical asset, a house, a car, a piece of land, we expect to take possession of it. We receive the deed, the title, the keys. It is tangible. It is real. But the global pricing mechanism for silver, dictated largely by the COMEX futures market in New York and the LBMA in London, operates on a system of paper promises, a fractional reserve casino that makes traditional banking look conservative. These financial institutions have spent years suppressing the true price of silver, not by moving actual physical blocks of metal, but by trading millions of derivative contracts. These contracts are nothing but digital ghosts representing silver. At various points over the last few years, the ratio of paper silver traded to actual physical silver sitting in the registered vaults has reached astronomical, logic-defying heights. We have seen ratios exceeding 350 to 1. I want you to visualize that for a moment. Imagine a stadium holding 350 people, and in the center of the field, there is only one silver coin. Every single person in that stadium is holding a piece of paper signed by a Wall Street bank, declaring that they and they alone own that exact coin. This system was a paradise for the bullion banks. It allowed them to act as the ultimate price makers. Whenever global uncertainty rose, or whenever industrial demand threatened to push the price of silver up, threatening their massive, highly leveraged short positions, they would simply flood the digital market. They would hit the sell button on thousands upon thousands of naked paper contracts backed by absolutely nothing but their own hubris. This artificial tsunami of paper supply would instantly crush the price, triggering the stop losses of retail investors, shaking the weak hands out of the market, and allowing the banks to cover their positions and pocket the difference. It was the perfect crime, a rigged game where the house held every single card. But the house made one catastrophic, fatal miscalculation. They assumed the music would never stop. They assumed that the buyers on the other end of those paper contracts would always be speculators, hedge funds, and day traders who only cared about the fiat currency price difference, people who would forever roll their contracts over, month after month, year after year. They arrogantly assumed that nobody would ever actually demand delivery of the physical metal all at once. My friends, the world of 2026 has violently broken that assumption. The paper game is over. The digital ledgers are catching fire, and the institutions that sold billions of dollars worth of silver they never owned are now desperately sprinting toward an exit door that is far too small for even a fraction of them to fit through. Let's rewind just a few months to January of this year. Many of you who have been following this channel for years remember exactly where you were. We watched in absolute awe as silver staged a historic, breathtaking physical run, temporarily soaring past expectations as industrial buyers panicked. But it wasn't just a price movement on a screen, it was a physical run on the vaults. In a matter of days, tens of millions of ounces of physical silver were violently stripped from the COMEX registered categories. The inventory vanished. Wall Street panicked. They unleashed their standard playbook, utilizing their media mouthpieces to call it a temporary anomaly, a speculative bubble driven by internet forums. They raised margin requirements to exorbitant levels, forcing paper liquidations and successfully dragging the spot price back down. The bankers wiped the sweat from their foreheads, patted each other on the back, and told their wealthy clients that the squeeze had been broken. They were wrong. They didn't break the squeeze, they only broke the pricing mechanism. By artificially crushing the paper price while the physical supply was evaporating, they created an unprecedented divergence that is now tearing the system apart. Right now, as I speak to you, the spot price you see scrolling across the bottom of a financial news network is a complete fiction. It is a phantom number. If you look at the Shanghai Gold Exchange, physical silver is trading at a massive structural premium over the West. In Dubai, in Mumbai, in Singapore, industrial buyers are bypassing the paper markets entirely, paying exorbitant premiums just to secure the physical raw material they need to keep their factories running. This is the sound of the paper market entirely losing its grip on the physical reality of planet Earth. And why can't Wall Street just mine their way out of this? Why can't they just use their billions of dollars to pull more silver out of the ground to cover their naked shorts? This is where the human tragedy of financial engineering meets the cold, unforgiving, immutable laws of geology and mathematics. The Earth's crust does not care about Wall Street's algorithms. We are currently in the 6th consecutive year of a massive structural supply deficit in the global silver market. Over the last half-decade, human civilization has consumed nearly 1 billion ounces more silver than it has pulled from the earth. We have survived by eating into our historical above-ground stockpiles, draining the vaults of London and New York at a terrifying velocity. And mining cannot save the short sellers, because the mechanics of silver mining are entirely misunderstood by the financial elite. Over 70% of all the silver produced globally is not mined from dedicated primary silver mines. It is a byproduct. It is a secondary metal scraped out of the earth while mining for copper, lead, and zinc. You cannot simply flip a switch and tell a mining conglomerate to produce more silver just because the COMEX price experienced the margin call. If the global economy is slowing down and the world doesn't need more zinc for construction, they are not going to spend billions of dollars to open a massive new zinc mine just to extract the tiny percentage of silver trapped inside the ore. Furthermore, the mining industry has been starved of capital for a decade. Exploration budgets were slashed to zero during the bear markets. The regulatory environment has become a labyrinth of ESG mandates and endless environmental reviews. Today, discovering a new silver deposit and actually bringing it to commercial production takes anywhere from 10 to 15 years. The supply of silver is not just inelastic, it is practically frozen in time. But while the supply is frozen, the demand has become a runaway freight train with no brakes. Wall Street spent 40 years treating silver like a useless financial toy, a relic of the past to be traded for fractions of a penny in profit. But the engineers, the scientists, and the manufacturers of the world treat it like what it actually is, the single most critical, irreplaceable technology metal on the periodic table of elements. Silver is the most electrically conductive, the most thermally conductive, and the most reflective element known to mankind. You cannot build the future without it. Look around you. Everything that defines the year 2026 demands this metal. The transition to renewable energy is no longer a political talking point. It is a global, legally mandated reality. Every single photovoltaic cell capturing the sun's energy across the vast deserts of Nevada and the sprawling rooftops of Europe requires a highly specialized silver paste to conduct that harvested electricity. The solar industry alone is consuming a staggering percentage of the global mining supply, and panel efficiency requires more silver, not less. Then we have the electric vehicle revolution. The internal combustion engine is being phased out globally. A modern battery electric vehicle, with its advanced autonomous driving sensors, its massive battery management systems, and its miles of internal wiring, requires up to 50 grams of silver, nearly double the amount required by legacy vehicles. Millions of these cars are rolling off assembly lines in China, Germany, and the United States every single month. But the absolute demand shock of 2026, the black swan event that Wall Street entirely failed to model into their risk assessments, is the exponential explosion of artificial intelligence. The massive hyperscale data centers required to train and run the next generation of AI models are consuming unimaginable amounts of power. The servers generate immense heat. The high-efficiency semiconductors, the specialized cooling components, the advanced switches routing petabytes of data, they all require microscopic, ultra-high purity silver coatings to prevent them from literally melting down under the electrical load. Industrial demand now accounts for the vast majority of all silver consumed on the planet. And here is the vital, inescapable point that seals the trap on the short sellers. Industrial buyers cannot use paper contracts to build solar panels. A semiconductor manufacturer in Taiwan or an automotive plant in South Korea cannot fulfill their production quotas with a COMEX futures contract. They need physical metal sitting on their loading docks, ready to be melted down, refined, and installed. When a critical raw material goes into a multi-year structural deficit, industrial buyers undergo a psychological shift. They transition from just-in-time inventory management to just-in-case panic hoarding. They realize that a lack of silver means their entire billion-dollar assembly line grinds to a halt. We are seeing companies desperately securing forward supply, paying massive premiums, and refusing to lend out their inventories. Wall Street paper pushers are now in a direct physical bidding war against the unstoppable force of global technological advancement. And Wall Street is losing. As if the brutal mathematics of supply and demand weren't enough to crush the shorts, the entire geopolitical landscape has fractured beneath their feet. We are witnessing the East actively, aggressively breaking the financial rules written by the West. The BRICS nations, Brazil, Russia, India, China, South Africa, and their newly added members have accelerated their de-dollarization initiatives. They have realized that holding U.S. Treasury bonds, holding paper fiat currency backed by nothing but a $35 trillion mountain of debt, is a dying paradigm. The weaponization of the dollar over the last few years woke the world up. Now, sovereign wealth funds and central banks are repatriating their wealth. They are hoarding hard assets. They aggressively bought gold for the last 5 years, driving it to record highs, and now they have recognized the profound strategic vulnerability in silver. China, recognizing that their dominance in solar panel manufacturing and electric vehicles is entirely dependent on silver, has quietly and efficiently restricted export quotas of refined silver ingots. They are treating it not as a tradable commodity, but as a matter of absolute national security. Russia is doing the same, diverting their domestic mine supply straight into the vaults of their central bank and industrial military complex. The physical supply chain is splitting in two. The West played derivative games with paper receipts, enriching a few bankers in Manhattan, while the East quietly, methodically drained the physical metal out of the vaults. Now the music is stopping, the vaults are echoing, and the West is left holding nothing but thousands of worthless digital receipts. Behind all these numbers, behind the geopolitical chess moves and the industrial panic, there is a profoundly human story that we must acknowledge. For generations, average, hard-working people have been financially hollowed out. The purchasing power of the wages you earn with the limited time of your life has been systematically degraded by endless money printing, deficit spending, and hidden inflation. The middle class has been squeezed until there is almost nothing left. But many of you watching this channel, the true Aurex community, you saw through the lies. You saw the writing on the wall. You chose to step out of the matrix. You chose to protect your families, your hard-earned savings, and your generational future by converting dying fiat currency into physical silver. You became stackers. You took physical delivery. You endured years of being mocked by mainstream financial advisors who told you that precious metals were a barbaric relic. You watched arrogant analysts sneer at you on television, telling you to put your money into their overvalued tech stocks, their volatile crypto tokens, and their complex, opaque financial products. You endured the psychological warfare of the orchestrated price crashes, watching the spot price plummet artificially on a Tuesday morning for absolutely no fundamental reason. But you held the line. You held it because you understood a fundamental truth that a Wall Street algorithm cannot comprehend. An ounce of silver in your hand is worth 1,000,000 paper promises in a banker's bankrupt ledger. The trap that is violently closing on Wall Street right now is the ultimate vindication of your patience, your intellect, and your absolute refusal to be a victim of a rigged system. Let's examine the pure, unadulterated terror currently echoing through the boardrooms of the institutional short sellers. These are men and women who have lived their entire careers insulated from consequence. Their risk models are based entirely on historical normalcy. When they sold naked short contracts, creating artificial silver out of thin air, they fully assumed they could simply buy them back later at a lower price to cover their positions. But covering a short position requires one fundamental thing: a willing seller. In a normal market cycle, when an asset's price rises, people naturally sell to take their profits, providing the liquidity for shorts to escape. But this is not a normal market. This is the end game of a multi-decade suppression scheme crashing into a physical shortage. When a Wall Street institution gets a margin call today, they are forced to enter the market and buy silver to cover their short. But who is going to sell it to them? The industrial manufacturers aren't selling. They are hoarding because their businesses will die without it. The Eastern central banks aren't selling. They are accumulating for national security and the backing of their new trade currencies. And the retail stackers, you, the people watching this video, you certainly aren't selling. Why on earth would you trade real, scarce, physically vital wealth for digitally printed fiat dollars, right at the exact moment the global monetary system is buckling under its own debt? There is no one left to sell to Wall Street. This is what infinite risk looks like. Forced buying meeting a total, absolute vacuum of willing sellers. As the banks desperately scramble to cover, they are forced to bid the price higher and higher. This rising price triggers even more margin calls for other institutions, forcing them to buy, which drives the price even higher. It is a vicious, inescapable, algorithmic death spiral. The very mechanism they used to suppress the price for 40 years is now the engine of their destruction. We are already seeing the terminal cracks in the foundation. Open interest on the futures exchanges is acting erratically. Physical lease rates in London are spiking to levels that indicate sheer panic borrowing. And major bullion dealers are quietly struggling to source wholesale 1,000-ounce bars. The illusion is fracturing. The moment of reckoning is arriving. Very soon, a major industrial entity, a sovereign nation, or a massive institutional whale is going to stand for delivery on the COMEX or the LBMA. They will present their contracts and demand the physical metal. And the exchange, stripped of its inventory, will have to stare them in the face and utter the two most terrifying words in finance: force majeure. They will admit they do not have the metal. They will force cash settlement. The second that happens, the illusion dies forever. The global market will instantly realize that paper silver is nothing but an unbacked fiat derivative. The ensuing panic rush to secure the remaining physical silver will make every historical financial mania look completely insignificant. The price will not just rise, it will revalue. The predictions of triple-digit silver are not hyperbole. They are the mathematical necessity required to balance a fundamentally broken, entirely depleted market. John A.G. here, speaking to you directly from the heart. They have spent your entire life trying to convince you that wealth is just digits on a banking app, that leverage is a substitute for capital, and that debt is money. They built a towering castle of paper to enrich themselves at the expense of your labor. But reality is undefeated. Physics, chemistry, and supply and demand are the immutable laws of the universe. The world requires silver to survive the technological transition of this decade, and the world has realized it is running out. The short trap is not a conspiracy theory. It is a mathematical, geological, and financial reality unfolding right now before our very eyes in May 2026. The banks sold what they did not have, what they cannot print, and what they can no longer find. And now they cannot buy it back. If you hold physical silver, you hold the antidote to the poison of the modern financial system. Do not let them shake you out with the volatility they are engineering right now. Do not let them convince you to trade your physical security for their dying currency. You hold the line. You understand the fundamental truth of the age we are living in, and you are positioned on the right side of history. Thank you so much for watching. Thank you for being such an integral, vital part of the Aurex family. Please, if you found value, truth, and clarity in this video, hit that like button right now. Leave a comment below, tell me where you are watching from, tell me your story, and let me know your thoughts on this historic shift happening in real time. Share this video far and wide. Send it to your family, your friends, anyone who needs to wake up to what is coming. The algorithm will try to suppress this truth, so I'm relying entirely on you, my dedicated subscribers, to be the network that breaks through the silence and spreads the word. Subscribe to the channel if you haven't already. We are building a powerful community of awake, aware, and fiercely prepared individuals who refuse to be victims. Until next time, stay vigilant, stay incredibly strong, and protect your wealth at all costs. John A.G. signing off. God bless you all.